Hello everyone, and welcome to our presentation on Walmart in transition, financial insights and future forecasts. We are Group 13-7, and over the next 5 minutes, we will walk you through Walmart's financial journey and future outlook. Today, we will cover Walmart's background, balances, future forecasts, and strategy insights. Here are the team members who worked on this project. Founded in 1962, Walmart aims to help people save money even better. It has expanded globally and continues to drive digital transformation. Now, let's look at Walmart's financial performance. Net income showed a stronger upward trend from 2010 to 2025. You can see a dip in 2019 due to restructuring and income's investments, but a stronger rebound followed after 2020. Driven by digital expansion, the year-over-year changes reflect its strategic shifts and market adaptability. The three-year moving average clearly indicates sustained, resilient long-term growth. Furthermore, the distribution of net income is concentrated in the $13 and $17 billion range, showing no volatility and stable profit margins. Finally, on revenue, Walmart demonstrated sustained growth, with total revenue rising from $408 billion in 2010 to $681 billion in 2025. This growth was fueled by omnichannel expansion and several basic business, leading to more diversified and resilient revenue structure. That concludes the first part. Now I will hand over to my partner.
Let's examine Walmart's physical footprint. The number of US stores grew steadily. Internationally, the count first increased, then was optimized as Walmart exited less profitable markets like the UK and Japan. The total store count peaked in 2018 and then stabilized, reflecting a strategic shift toward quality growth. Looking ahead, our short-term revenue forecast for 2026 to 2030 projects stable growth at CAGR of around 3.5%. This will be driven by continued digitalization and omnichannel expansion, meeting resilient consumer demand. Let's look at the short-term store outlook for 2026 to 2030. In the US, we expect a slight decline or stabilization due to market saturation. The focus here shifts entirely to efficiency and enhancing the omni-channel experience rather than adding new stores. Internationally, we project a moderate rebound. Following the recent restructuring, growth will be concentrated in high potential markets like Mexico and India. For the long term, from 2031 to 2040, net income is projected to grow significantly, averaging 39.4 billion, with the potential to exceed 50 billion. This will be fueled by automation, data intelligence, and high-margin services like retail media, healthcare, and fintech. Our long-term store forecast builds on the short-term trends. In the major US market, the store count will remain stable, with investment focused on digital integration and supply chain efficiency. Internationally, we anticipate gradual strategic expansion in emerging markets. Mexico and India are again highlighted as the core growth engines. Overall, the total global footprint will see controlled expansion, prioritizing higher sales productivity per store rather than just increasing the count. These forecasts are underpinned by four key strategies: digital innovation to enhance customer experience, global market focus, especially in Mexico and India, business diversification beyond core retail, and ongoing supply chain efficiency improvements. In conclusion, Walmart demonstrates resilient long-term growth driven by digital transformation, operational efficiency, and strategic geographic expansion. Its continued focus on diversification and innovation will solidify its leadership in global retail. Thank you for watching.